Good morning. A day when the Brent crude fell over $92 per barrel, which was regarded as a sign of positiveness for Indian economy. The Indian markets witnessed correction. The fall in the Indian markets was a result of the global macroeconomic events that have been resulting in the withdrawal of the FII money in the recent last few weeks. The Indian markets opened on a relatively negative note but extended its losses further at the end of the day. Finally, the Indian markets fell over 1.2% down. FIs were net sellers in the cash market segment where they sold goods of around 333 crore yesterday. Metal sector was the major sectoral loser of yesterday after it fell over 2.85% yesterday. NMDC, Jindal Steel, and Hindalco each fell of around 5% each. Yesterday, the US markets also ended the day on a negative note on concerns of slowdown in the German economy. The German industrial output fell to 4%, which is the lowest in the last 5.5 years. Along with this, the IMF also revised the world economic projections downwards to 3.8% from 4% forecasted in the month of July. This is the third consecutive down rating by the IMF in the last couple of months. However, the positiveness for the Indian markets is that the IMF has revised India's growth forecast a little to over 5.6% from 5.4% projected 6 months ago. The Asian markets are trading in a negative zone in the early morning trade, with the Singapore Nifty being down by around 28 points. The Indian markets are expected to be sideways for today's session. Major resistance and support levels for Sensex comes around the level of 26509 and 26247 levels, while major resistance and support levels for Nifty comes around the level of 7927 and 7840 levels. Thank you very much and happy investing.